Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Monday, February 24th. So, big move down today in equities. Where did we finish for the day? SPY down 3.3%. Qs finished down almost 3.9%. At one point, they were down about 4%. Small caps finished down 3% as well. And I think this was the biggest down day in about 2 years, I think, is what I heard. I never measure these things exact, but I saw the headline going across the screen earlier that it was worst red day in about 2 years. That seems about right, I would say, from memory. So, what do we get here in terms of performance and within sectors as well as the technicals? I'll kind of go over what my feeling is for tomorrow and later in the week. But you could see for the indices here, we really didn't balance this. This is a spreadsheet that measures not only the change for the day, but also it's really good at spotting relative strength and relative weakness, right? So we want to know on days like this, what are some of the areas that come back first. And there was some bright spots. You could see. I mean, a lot of these groups for the overall day, finished down 3 or 4%. Some of the defensives did a little bit better. The gold miners finished up 1.3%, but they're one of the ones that got hit the hardest after the open. So it was one of those things that if you were long gold miners and some of the more defensive areas, probably the open was the place to kind of take your profits in some of the gold stocks. I think that was without going into the charts, because I didn't come in long any gold miners today, but I think that was the case. And gold actually finished up positive for the session, up 92 basis points, but gave back a lot of those gains, from kind of the extreme to where we were this morning. The one thing that I noted in gold, which I talked about earlier, was this virgin point of control was taken out. Usually that is a place to take profits. That's not a place to go long, in my opinion, right? I mean, this is all my opinion and not giving out any advice or recommendations. But after a big run up like this, and if there's a virgin point of control from a while back, which this one is, remember what these are. It's an area of high level of volume that price has never actually revisited before. So I think this one's from a few years back. I think 2013 is what I sent out earlier. So that is taken out, and that does look like a toppy looking candle. Now we'll see. I mean, one of the things, if you're bullish gold, what you want to see is probably some type of consolidation here and putting in another bull flag, like back here, right? Price got a little bit extreme, a little bit ahead of itself. It settled in for a little while, and look where it is since then. So is there another one further? There are further VPOCs up here. So for longer term, definitely something to watch. But I think at this point, probably a little bit of consolidation. We'll talk about bonds too. Bonds, I thought, when I put out the member weekend video, I thought bonds could possibly run a bit more. And they did fine today, up 1.2%, and they didn't really give back too much of the gains. So would I go long bonds here? No, probably not. I would wait for a better signal. I think taking profits into a run like this after this move in bonds is probably the right thing to do. So let's talk a little bit about the indices, and then I'll talk about this type of pullback. So when I went to bed last night, I saw futures down about 1.5%. We did twice as much. So I thought, number one, right, and it's kind of like it's the exercise. Well, here's support. If we breach this level, then this is the line. If we breach this level, then this is the line. So basically, for as fast as we're moving right now, that's the best that we can kind of do, and then try to plan out where you want to be adding risk. But we definitely obviously fell through value in the overnight session. So the first line, which was about 3,300, has been breached. The bottom, so that was the top of the February value area. Now we're to the bottom of the February. So this could hold, right? It is support here. I would say the next area that if we breach, you have this virgin point of control down here. That's 3172. So again, we basically have to hold where we are now. If not, 3172 and a closer level to watch in S&P futures is this 314. Sorry, that's, yeah, 3145, and then there's 3122. So these two places, like if you are, have been waiting for a pullback, this is one stop that we've made, but I think that we could possibly fall. I'm sorry to say, but I think that we could possibly fall to 3144, 3122, and that would be, like I said, a good level to watch if this level gets breached right in here. So 3170 is going to be the first one, and then we've got levels in here. So there's a bunch of things to kind of watch to the downside. Those are all virgin point of controls. That's a virgin point of control on the daily. That's a virgin point of control on the 1 hour. So those are the next levels to watch. If we cannot hold this, if we can hold this in the overnight session, then there's possibly a chance. Sectors that did okay today, that gave you some trading opportunities. I thought the software names did pretty well today. It's now been a couple days since software has been selling off, so perhaps that might be a group that money starts to flow back to again. These are some of the names in this one. Team was probably your best one. Remember Team had good earnings a couple weeks back. This has been a name that's been on the member watch list. It did close back above value, so really nice. That would be a name to watch for tomorrow. Again, it did almost fill this earnings gap as well today, but I would say nice relative strength. I think it closed higher, so I would definitely keep an eye on this name for the rest of the week. Really nice performance and did something differently than the whole group. AYX was another name that did pretty well from the open. But to finish my thought, the software names have a little bit less exposure to probably to this virus right now. And let's face it, I haven't really talked too much about that, but I'm still in the optimist camp. I think that this thing gets solved, but before it does get solved, there could be some more short-term pain. Right? It doesn't help that this is now it's affecting Europe and Italy, which is a huge travel center. So that's really going to affect them. And it's the whole thing just kind of stinks, right? Globally for this to happen. And I do have faith and I'm optimistic that eventually this gets solved, but there could be a lot more, there could be more downside pain before it does get solved. So we just kind of have to deal with this as we go along. And, the best thing I can say is that, you really can't control this thing in terms of, what's going to happen. It's a very big unknown. The only thing that you can control is how much risk you're taking and your process, and that's really what trading comes down to. In these volatile times like this, it's a big test. It's a big test, and it's a big test of most people were down today. I had negative P&L. You just don't want to make it a worse situation. So do I think based on some of the internals, and let me just go through the rest of the before I get to that. But yeah, GDX was down here. Biotech did okay. I tend to look at biotech as one of those sectors that kind of comes out of corrections or dips. But you did have both internet names and software names. Also clean energy. Look at solar. At one point was down over 6% on the day, which is huge, a huge move. And that did come back. Let's just look at this solar ETF. Because again, this had the strength for the last few weeks. But, all in all, not bad. I would say even down 3.75%, you have to realize where this thing has come from, and it's made some huge moves the last few weeks. So I put out this list on Friday, right? Because there's obviously unique things in any pullback, right? But like this particular one, where we're dealing with a virus that's now affecting multiple countries. But there's a lot of things that you can kind of look to in the internals that seem to repeat themselves when we have these market dips or little corrections in the market. So I've learned, number one, to kind of try to let them play out. And I take shots in some things like we saw Microsoft calls, which is a name that I've been watching and haven't been participating in too much. So it's a nice dip in Microsoft, and when you see call buying in something like this, down to the all the way down to the 50-day moving average. I think that's an interesting spot in Microsoft. So I was trading this one. I'm also long just a little bit of Microsoft, not this week but next week's calls. That of course when you're trading options in this market with the VIX now above 25, it is a whole nother game, right? The options, stocks are moving a lot faster. The option prices are really going to move back and forth, even if there's no stock movement because of the volatility, right? When the VIX is at 25, the volatility, one of the components of option pricing is going to move a lot faster. The option price with that type of implied volatility. So going back to my little checklist here, I've learned. I try to really let things play out a bit, and some of the things that I look, I talk about waiting for a little bit of confirmation, waiting for some box to be checked. So number one, right, the VIX, right? I said mention 25. It did break down a little bit here around 3 o'clock, but then it just ramped right back up into the close. So this thing finishing up 46, we have no confirmation yet. Right. We could also look at VVIX, right, which is the second derivative. This did come in, from the highs, so that's one thing that's slightly positive. I would say is that the volatility of the VIX itself opened on the highs and almost closed on the lows, so that's not bad. Couple other things that I tend to look at is market breadth, right? I want to see if buyers are coming back into the market. If we go back to the 5 minute, let's see, I just need any 5 minute chart here, but you could see the pattern. Am I in the 5 minute? Oops, I'm on the 1 hour. Right, you could see that this was basically pretty constant all day long. Even when we bounced, you could see market breadth really didn't get any better. So that's a to be determined, to be continued. That's not giving us any confirmation. I mentioned the VIX. No breakdown whatsoever in that. We just discussed that one. The put call ratio that did tick higher, so that tells me that again, this is basically, it doesn't mean that the dip is over. It just is one of those boxes that I think needs to be checked. We need to see that panic, some nervousness come into the market. And I think with the put call ratio over 1, I think that is something that's good. And again, it doesn't mean right away that just because that's over 1, buyers are going to come back in, but you need to. I think it's again just part of the process in a pullback is that you need to see that fear come back into the market. The technical levels to hold, we don't know that yet. It's too early for that. So, as I talked about in the pre-market session, I said basically just take it easy for the day. Don't go crazy trying to, and again, I can't tell you guys what to do, but I said I'm not going crazy with adding risks today. I'm going to be looking to see what names kind of show some strength, relative strength, and again, it's usually a several day process. So I think be patient, let this kind of play itself out, and wait for that confirmation. So and again, I just don't think with this the way that this virus is spreading from country to country, even if we do get some more boxes that are going to be checked, I still think positioning with this needs to be lighter than normal. Other things that we were talking about last week, just to wrap this video up, was how over the tips of its skis growth got in terms of value. Well, we're seeing value come back a bit. We're still not back to the 50-day moving average. I could imagine that this gets the mean reversion comes in a little bit further, but that was a big warning sign for the market. how far growth got. And and that's another thing that concerns me is the bullish positioning that was going on for the last couple months. How much does that need to get shaken out further? Probably another day, I would think. So to be continued. If we get more of a pullback tomorrow, that is when I'll probably start to be a little bit more aggressive with, looking at some names that I really like that I think can hold up, longer term. That longer term could be a good attractive points, but I think you just kind of have to take this one day at a time and have some things that you're watching in terms of internals or things like the VIX that will kind of give you a little bit of confirmation that some of the selling pressure is over, because I don't think we saw any major confirmation today, and again I traded accordingly as I saw that throughout the day. All right, guys, so that's it. There wasn't much, the option flow is always going to be two-way on these days. I try not to read too much into the option flow. Just like last week, there was still crazy call buying going on for the majority of the in the beginning of the week. So, what happened to all those orders, right? That we saw all those calls go up. It's one of those things where you have to use your judgment and your risk system over option flow. Option flow for me always is a backseat. I think it's notable. It can create nice, day trading momentum for you. It could provide some trade ideas. It could give you a sense of what the institutions are doing if they're buying more calls or more puts. But it's not the end all be all, and I've said that multiple times in these end of day videos. So you just have to be careful, because again, I see so many traders seem to rely on it a lot on the Twitter sphere. I don't know why. I don't know what has encouraged people to think that they're going to find answers in the option market, but it is what it is. It's great for short-term momentum. So a couple names that I have listed there: Microsoft, Xerox, Intel. Again, the one that jumps off the page for me is because Microsoft is coming into the 50-day moving average and top of value, so that made sense for me to try trading that one. All right, guys, that's it for today's video. Have a great night, and we'll see you tomorrow.